today we are going to speak about two major risks of real estate investors on Dubai market. That's all about us. Let's go to the main point of this meeting and discuss a few general risks, and after I will explain how you can escape this risk and how you can invest much more efficient and much more safety. So let's go to 5 risks I have mentioned today and answer these questions. So first risk is resale problem. Second major risk, let's say it's about volatility of the market. Third risk is service charge. Fourth risk is hype projects and locations. And the risk number 5 is off-plan versus secondary market. And why off-plan in a lot of cases is more expensive than secondary market, and does it really okay, or is just a gap between the different markets? So let's go fast, and I'm going to tell you about resale problem. Second problem is resale. So people used to like advertising where companies say that buy right now something on Dubai on a growing market and you will be able to resell it with a solid profit after 1 year or maybe half a year, maybe after several months. And these companies also say that you need to buy something with leverage. So with a payment plan, you don't need to pay 100%, you need just pay 30% of apartment and you will be able to resell it. After that, you resell it with a profit. In most cases, it's not so true, because to buy something in Dubai, it's not a problem. To sell something in Dubai, this is a problem. Because you can sell it yourself. You can just publish this advertising on a website and find the buyer, because 99% of all this market is a realtor's market. So they get all the leads, they get all the clients, and you just can't use local websites about real estate. Once you're going to publish your advertising and listing, you're going to see that you will be in the company with hundreds of similar listings, but the price is going to be 30 or maybe 40% less that you want, because the realtors are receiving leads and they make kind of scams on this market. That's why it doesn't work. And once you will ask realtor to sell your apartment, and you probably know that this is about 2% commission on the secondary market. But in most cases, if realtor has a client who want to buy off-plan, not just secondary, and developers pay 5% commission and you pay 2% commission. So there is no reason to take this client and go with him to you. That's why there is a big problem for reselling thing. So what is the answer here? You need to calculate your profit and takes into account that your reselling cost is going to be at least 4%. If your reselling cost at least 4% and that's okay for your math, that's wonderful deal. Once you haven't calculated, you will have a lot of problems to resell something. That's problem number 1. Let's go to problem number 2 about volatility of the market. Yes, Dubai market is quite volatile. So it was like this with several crises in 2008, 2014, and before the COVID, 2019, 20. Let's say 20. Let's don't take into account 2008, 2020 because 2020 it was a COVID, so it was something unpredictable. And Dubai is a tourist city. If no tourists, the pricing going down, so it's okay. 2008, we even don't need to take into account because 2008 all real estate was leveraged or in debt. So people took debt and mortgage a lot of mortgages to buy something. Now most of the transactions, like 90% of transactions in Dubai, is cash transactions. So it's not mortgage, it's not loan. So we don't need to take into account this. 2014 is a very interesting example of what's happening now and what's happened in 2014. So now the buy market is quite here, and there is two questions. One question: where it will go? It's gonna be here, or it's gonna be here like always. So from my perspective, it's gonna be go up and up because for now situation and what before, it's a quite different situation. Now Dubai have built a brand where you can save your money from war and from governments of other countries, so where you can hide also money, that's true, and where you can be safe for at least 3 to 5 years, and your taxes is going to be zero. So that's why I think now is a kind of different situation that it was in 2014, because now with the Russian crisis and with the high, very high, how I could say it, high inflation, yeah, in Europe, and new power from a Chinese market that was shut down after the COVID. So now Dubai has strategically great times. China traffic after the COVID shutdown, European traffic of real estate investors and just buyers who want to escape a huge inflation, Russian, Ukrainian traffic because of the war and because of the thing. So all now goes to Dubai from different sources, from different countries, and Dubai economy and Dubai real estate market now backed by cash flows from all other countries. So now is the best time for Dubai, ever, ever. Sorry. Yeah, I need to go wake up. And yes, and this traffic and this interest is going to be spreaded by Abu Dhabi, Sharjah, etc. But what else you need to know about Dubai? The Dubai market for luxury real estate or just real estate is still very low, up to 3 times cheaper than in London, Moscow, or 4 times and 5 times lower than in Singapore. So Dubai market was before an emergency market. That's why it had so much volatile things, and of course in 2014. But now this market is start to be developed. That's why it's if something was in the past, it doesn't mean that it's gonna be in the future. That's why Dubai now has a great potential to grow at least 2-3 years. So that's why going now into the real estate market in Dubai, maybe not perfect entry point, but still very good. Perfect entry point was in 2020, of course, on the lowest level of prices. Let's go down to the risk number 3. Risk number 3 in Dubai, service charge. This is a kind of damn shit because this kind of damn thing. Yeah, this kind of interesting thing because service charges are high in Dubai. That's true because of the AC, because of different things, pools, etc. So just be sure that you took into account these prices. The median prices for Dubai is approximately 18 dirhams per square feet in a year. It's just kind of medium. In high projects, high scrapers and luxury projects is going to be more than for 25, 30 dirhams. So just take into account if the economy is still good and the rent estimation is good and you know that you have this cost, just keep going. But many people just don't take into account. That's why they expected 5%, but in real it's like 3, maybe 2% because of uh, free time, like when you rent it out for like at Airbnb, and it just occupancy rate is like 80%, not 100%, and service charge is high because in service charge you pay uh, every month. It not depends you live on this apartment or not. Uh, I'm not good with the screen, so yeah, now I understood. The risk number 4 on this market, and we are quite near the finish of this thing. Let me refresh my mind. High projects and locations. High projects and locations. Yeah, in Dubai now there are a lot of hypes, launches and buildings, etc. And usually people think that if there is an applications like 15,000 applications for like 500 apartments, and people used to play in lottery, or people used to send a lot of EOE. It's kind of letter of intention, or when you pay and earnest money before you know exact like location even or exact apartment and price, people used to pay UAE. Yes, you have to pay UAE. It's refundable money, but in most cases, like more than 50% of the projects sold by UAE, not just a public launch of the project even. But this is a good and bad. Why is good? Because the real estate market is growing fast, and just developers can't build so fast as demand is. So this is good. That's why the pricing are growing. But what is bad? Because in hype, you just can't calculate the numbers correctly, and for investors it's very important to be with the cold hat and calculate the numbers, and just don't pay attention on hypes like IPOs or launch of the projects. So approximately 80% and plus projects that we estimate daily, our system estimates daily, it works like this. It's kind of IPO. From the beginning, the price is super high from the beginning. After the launch, it go up, and after it go down, 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 before the handover, and the handover the prices go up. So there is a huge period of time where price could be less than on launch. That's 80% of the projects in Dubai for now. That's true how it works for now, because many developers want to sell at very high price and people buy it. So why not? But real estate market is not growing so high as developers launching the projects and launching the new prices. That's ugly true. That's the risk on the market. How to escape this? Use our system. In system, there is analysis about the average prices of neighborhood, average prices for this kind of buildings, and our recommendations about this building. Do this building is good for investors, or you just can buy it for yourself and don't expect a huge appreciation or even appreciation on this building. So just use our system. It's for free, and also have a look at our live streams where we roasting a lot of different projects and launches. Let's go for the next and the last for today, but not least risk. Oh, let's start from there. I think I have killed the screen. It happened. So yeah, I have killed it. Let's go to the risk number 5. And this risk was about overvalued offers and off plan, and why off plan in most cases, in a lot of cases, more expensive than secondary market. That's true. I could say that approximately 60% for now off plan projects are more expensive than the same projects or same kind of projects on the secondary market. That's true. But why it's reasonable in most cases? Not all cases, but in most cases it's reasonable. Because if you can compare two projects, for example, this project off plan and the price is 2 million dirhams, and the similar projects, and it's going to be handed over like 2026, right? And on the other hand, you have the similar project but the price is 1.8 million. But kind of similar building, kind of similar class of the building amenities, and etc. And the location is going, it could be near, but the price is 10% cheaper. And also you can rent it from the day one, and here you just can rent it. Let's see what is going to be if you are going to invest 1.8 million in this building, and you use payment plan on this building. So, for example, from the year one, this is going to be year 1, year 2, and year 3, and it's going to be a kind of trend. So you're going to understand what was the math. So from the day one and the first year, you're going to rent it for approximately 5% ROI. So at the year 1, you have, for example, 5% ROI and like appreciation of 5%. So it's going to be 10% in general. Your asset is going to your equity is going to be 1.8 million plus 10%, 180k, and in general it's approximately 1.98 million, and it grew like in general 10%. You have made cash on cash 10%. Let's say what's happened with this apartment with the payment plan. First of all, the appreciation could be higher. Why higher? Because people want to buy something with a payment plan and don't want to pay a full amount. You can find a lot of people who can pay right now a piece of amount, not just whole amount. That's the difference. So you pay approximately 24% of this. So it's approximately 5,000 dirhams. And appreciation is higher, not just 5%, it could be 8% appreciation, but rent is 0%. So let's say what you're going to have after 1 year. So it's the growth is 8%, and the price of real estate now is 2 million, 8% is 1.6 million, right? So, and your equity now is not just 500, but 660k, because it grew for 160,000 and your equity now is much higher. So if you can count 660 by 500,000, let me find it for you, because my math is not so wonderful. I use a calculator. So 660. So it's going to be 32% cash on cash return. Here you see 10% and here you see 32. So you can spread your capital 1.8 on the different apartments off plan, and you're going to receive 32%. That's why while the market is growing fast, it's much more interesting thing to invest in off plan with this payment plan, because even if it's higher price than this, what is interesting thing, this is going to grow faster than this, because each potential new buyer who want to buy this resale apartment is going to like to pay a payment plan. So this payment plan grows like this here, and see with this payment plan, this appreciation grows here and here faster than here. And at the end, after like 5 years, this real estate could cost higher, approximately 20% higher than this, because between them there is a gap in years, approximately 7 years. So 2 years old once you buy this apartment, and 0 year old here, maybe 5 years. Between the 5 years buildings, there is in Dubai there is like quite a good gap of 10% appreciation at least. That's why people used to invest heavily in off-plan now, even if off-plan is more expensive than the secondary market, because you can rent it out right now, but first is still growing faster, and cash on cash gives you like 3 times more. That's all for today. Oh, about this risk, what you should make on this situation. If you are a smart investor, my like recommendation here is split or diversify your cash between secondary market and primary market, off-plan market. So it's going to be more reasonable. But if you want to make a tons of cash and the huge appreciation, huge return, it's going to be more risk, because off-plan more risk than the secondary market. Of course, you should pick the top 1% of apartments and buildings on the real estate market that now is growing fast, and keep your all capital in. But be aware, if you can't pay by payment plan, it's going to be losers for you. That's why if you want to make like a fortune on this market, you should concentrate your money on one point and pick the best projects, or maybe buy a whole project, whole building, or one apartment in this building, and wait a little bit. Once you pick it right, you'll be able to sell it in time with a very profit. But if you like a conservative investor and you want to be with a quite of average return but with a low risk, diversify your portfolio between the secondary and primary markets. That's all for today. Thank you for watching this open door. Next time, just come to us, and next time we are going to discuss next interesting topic about real estate market in Dubai. Thank you.